Welcome back to another Hump Day Real Estate with Kendell in the DMV. Today we got a guest coming back again for us, Brian Washington. How you doing today, Brian?
Great, sir. How about yourself?
All is well, man. Just trying to make it in this craziness in this world, right?
That's right. That's right.
Hey, 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 Brian. I don't want to take a bunch of your time, but we got you on today because we want to know a little something about what is this DSCR loan and how does it actually differ from traditional investment property loans?
That's a great question. I know, last week, I believe it was, you were talking about DSCR and the fraud that was going on out there and how popular this product has become. And simply put, it's very popular now because it's limited documentation. So, really, if you look at the skyscrapers that are out there, the large buildings, et cetera, people didn't turn in, their W-2s and their pay stubs to get qualified to buy those buildings. Those buildings qualify themselves with potential rents, and that's what a DSCR loan is. It's a loan where we, as a lending institution, will look at what are the potential rents that are going to be coming in, or what are the rents that are coming in for a particular investment property, and will those rents cover the new mortgage on the property? Okay, that a client may have come to us for to help them purchase a property or, cash out refinance it. So in a nutshell, the building is what qualifies the client for, the loan. The rent rolls are what qualifies the client for the loan. Okay, so we're not asking for pay stubs, like you said in your video last week. We're not looking for, we are looking for assets. We want to see that you have down payment money and closing cost money. Yes. But ultimately, we're looking at the building to qualify. Does that help in a nutshell?
Yep, 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 yep. And so DSCR, what does that stand for? What is that?
Yeah, great question. So it's DSCR, debt service coverage ratio. So what we're looking at, we're saying, let's say the debt on the property is $3,000 a month. And therefore, we're looking for the rents on the property to be at least $3,000 a month or more. If we have at least what we call a one-to-one ratio, then we got an approvable loan in most cases. Okay. The only thing with, if credit score is, below say 660 in our example that we, in our one of our main products that we have, that's the only challenge that we'll have. But other than that, we coach people up on the credit too. So,
Could, could a borrower qualify for a less than 1% ratio?
yeah, great question. You can qualify for, less than a one ratio. We just need, more down payment. So generally speaking, you're looking to purchase the property, you're looking at a 20% down payment. Okay. Now there are some instances you can go 15%, but again, the main thing is that mortgage has to be covered by the potential rents. So the less you put down, the higher the mortgage, right? So it can present a challenge there. So down to so if you do, let's say 25% down, we may be able to go down to 0.9%,
Gotcha.
in some cases. Yep.
Gotcha. Well, I just made it into the States and I hit Maryland and I'm from Europe. Can I use this product?
So you can. Very good question. So we can put these products, you can use a LLC. And in some cases, when a person is what we call a foreign national, this is the only product that we can use. But it still has to be an investment property. I want to make sure that's clear too. This is for investors. And when they're putting, 20, 25% down and they're say from another country, this is actually the product that we'll use to help them, get qualified to buy that house with that
Gotcha.
investment property. Yeah, all the way up to 10 units. So the other thing some people may want to know is, well, what if the property needs work? We just now came up with a product that will allow us to help you purchase the property, renovate the property, and then walk you right into a DSCR loan. Because one
Nice.
of the big challenges that was going on in was what's going on still in this industry, even right now. I was just on the phone, last week with some investors. They were really in a bad situation because they got the property under contract, but the hard money lender won't let them close unless they have a DSCR pre-approval or some type of pre-approval on the other side.
Mm-hmm.
Because you and I both know those hard money lenders, they're giving you what, anywhere from 6 months, 9 months, or 12 months. And then
Mm-hmm.
they want all their money back or they're going to be foreclosing. Okay. We, on the other hand, we're going to be looking at, hey, what's this property worth right now and what are the rents going to be to give, a final approval. Now, the appraiser that did the hard money loan is not the same appraiser we're using for that in loan.
Right.
Okay, this is for the buy and hold type investor. Okay, who's using hard money to purchase the property and fix up the property, but then they come to us. Okay, maybe 6 months later, hopefully the value has gone up. Okay, for what they thought it was going to be, 6 months ago. But if it hasn't, we won't do the loan, so, and that's where I think some other people have gotten stuck, with these loans. And it's better to get stuck on the front side rather than on the back side. When I say that, meaning it's better to get stuck, with the hard money lender saying, hey, you don't have a pre-approval.
Right.
Well, I can't give you that loan because hard money lenders will foreclose. That is a real thing. A lot of people think that maybe because these are private money lenders or small lenders, they're not going to foreclose. They are pretty vicious about it
Mm-hmm.
because they're not dealing with you and your primary residence. It's a business transaction and they will foreclose swiftly. Now there are situations, of course, they will, work with you and try to help you get out of that hard money loan, of course. But the main thing is you got to understand it's a real thing on the other side. I was talking to an investor last week that happened to them as well. So
Gotcha, gotcha, gotcha. Any credit criteria requirements?
yeah, the main thing is, you want to be in a situation where it's best to have already owned a property or own a property. It doesn't have to be an investment property, just a property. Some of my investors, they don't want to, lend to a person who's never owned a house, never had a mortgage. Okay. But those types of guidelines, they fluctuate depending on what's going on in the marketplace. Generally speaking, you want to be in the mid 600s. And if you're not there, again, you still call and let's see what we can do. Sometimes it's an easy fix, very quick, easy fixes to get the credit score up to where it needs to be so you can get the house, so you can start your, first investment property or second or third. The other thing that comes to mind, there's no limit as it relates to, how many of these can you have? You
Mm,
can put them again in your personal name. You can put them into an LLC. It doesn't matter to us, because even if I have an investor that has some of the limitations, like I think one has no more than 20 loans,
mm,
I've got other ones that will allow you to do that.
wow.
Still, use a DSCR loan to purchase another property. So it's a great wealth building tool. It's a great tool because it's less hassle because, time is our most valuable asset, right? I
Mhm.
mean, so, trying to pull together all your, if it's a pay stub situation or your tax returns, and then et cetera, and then looking at pulling, if you got other properties, you don't have to worry about getting all those mortgage statements, all those tax statements and all those insurance bills all together and the leases on those properties,
Right.
you know, all that's out the window. Now we're just focusing on that one property.
Gotcha, gotcha, gotcha. Now, does the score affect the rates on that product?
Yeah, absolutely. It's just like, anything else is that, I think about it like, something comes to mind, even dating, I'm a married man, but still, if somebody's been out there and out there and out there, two or three guys or, or two or three girls will date that same guy, the ladies are like, I don't know if I want to mess with
Right,
him.
right, right.
That's
So,
just an example.
yes, sir, yes, sir. So, typically, what, 20% down?
20% down is what they're mostly looking for. Yeah.
And so
But
okay.
but let me go back to the other point though about the credit score. So the credit score just will dictate what your interest rate is. And you can do interest only. You can do principal and interest payments. I even qualified, a person. They were trying to sell their property. You couldn't sell their property, and they didn't qualify with DSCR with the principal and interest payment. So we had to do an interest only payment, and then we actually qualified them that way. Okay.
Wow.
Now, interest rates, again, depending on your credit score, they go up or down. But once you get into the sales price and the 20%, you've got your 20% down, your loan amount is your loan amount. It's very rare that I've seen someone say, wow, I wish we, had a higher, credit score, and then now you would qualify. I haven't seen that scenario, or at least it's a manageable situation where I can say, all right, just pay this credit card down to X, and we'll be fine.
Got you. So let's jump into what you just spoke about, the interest only. What makes that a part of the loan product now versus, I guess, it being like the standard, it being interest only, like some of the hard money loans are.
So, hard money, that's just paying the fee to hold the money to buy the house, to fix up the house, right?
Yeah.
Whereas in the DSCR space, it's to help you qualify. Okay, so
Okay,
and
gotcha.
have a positive cash flow. So ultimately, it's going to be up to you to start to pay down on the principal if you want to. Whereas on interest only, because interest only, you're not paying down on the principal. Let's say, on property A, the interest only payment is, $3,000. I'm sorry, the principal interest payment is $3,000. However, your lease is 2,900, and you're only doing 20% down. You don't have to have an approvable loan. We turn that into interest only. Now your interest only payment is at 2,850. Your lease is at 2,900. Now we have an approvable loan. Okay. I'm just using these as examples. I'm not saying that that's
And
going to be your cash flow, positive or otherwise. But I mean, the bottom line is we as lenders, we're in business to lend money.
yeah,
And if you don't lend money, you're not in business, you're not making money. So the lending industry has come up with creative ways to make this work. Because I think that's the ultimate question. So, well, why would a lender do this? Because
yeah,
we want you to be qualified. We want to get you qualified. Now, everything that we approve you for, we're not saying you must take it. That's a business decision on your side. How you manage it after we close, obviously you have that liberty to pay down on the principal or not. Some investors say, well, look, I'll put that principal to the side, that I would normally pay to that interest only loan, and then I'll let the value of the property to the market, push up and increase my equity position on the loan. And then if I don't have enough, quote unquote, then when I'm ready to sell, then I could take some of that principal and I put away in the bank and pay it down on the mortgage when it's time to sell. If you come into that situation,
now
okay.
is that an option though to go interest only, or is that just something that
It
only
is.
comes up as
Yeah,
so it
yeah.
is?
You
Okay.
can walk out. Yeah, you can walk in the door, virtually, if you will, and say, "Hey, I want an interest only DSCR loan." You can do
Mhm.
that. Absolutely. Um, Again, everyone has to make their personal decision. Is that what they want to do? Some people do it, for strategic reasons. Some people do it because this is what they want to do. They want to have a positive cash flow on their investment property. Okay. Maybe they're positive when you walk in the door. My positive cash flow goal was, $350, $500. Well, you're not getting it if you have that principal and interest payment. But with the interest only payment, you're getting that. You
Yeah.
just have to be mindful that that mortgage balance is not going down. You're going to have to, pay it down in the future if necessary. I can't really, nothing really comes to my mind right now as to why you would need to do that. But ultimately, we hope that, values on properties, across the country on average go up, on a long-term basis of 4%. So if that's happening, you
Yeah.
should be in good shape 5, 10 years, from the time we start this, that you'll have more equity without having to pay down on the principal.
Right.
Just be wise with that positive cash flow.
Yeah.
Okay.
Very wise. Don't be spending money on crazy stuff just because you have it. Now all of a sudden you done went out and bought a new Ferrari, right?
Exactly. Exactly.
So tax returns W-2s are not needed in this case.
No. And as a lender, I love it. I love it because, the tax code and tax returns are complicated enough. I think somebody told me not too long ago, tax code had over 70,000 pages in it, okay? And tax returns themselves are just complex. So no, I don't want tax returns if we don't have to. If we can just look at the property and your down payment and credit score, I'm very happy to just turn that into the underwriter.
Gotcha. And so earlier you mentioned um, it's ideal for folks who already have a property, some type of property, but a first-time investor can actually get approved for the DSCR, right?
Yeah, yeah, absolutely. It's just that if some of my investors right now, if you have not owned a property and your first property is an investment property, they may not want to fund you looking at a DSCR loan.
Gotcha.
They want to see a little bit of who you are. That may be the case because this is a very fluid market. This is when I say this meaning the mortgage industry is fluid. It's always changing. We get guideline changes every day, and the DSCR market is also changing because it's not highly regulated by the federal government. We're not talking about Fannie Mae, Freddie Mac money. We're talking about private institutions who have large sums of money and say, I have to get this money out on the street so I can get a return because money sitting in the bank is not a good thing. So they have to find out creative, responsible ways to get the money out on the street as fast as possible because money in their bank account is no good at all. I mean, because I don't need to tell you, you know how it is. What would you rather earn? Somewhere in the neighborhood of quarter to 1% or 7 to 8% on your money. You want to
Right.
earn 7 to
Right.
8%. Which reminds me, by the way, yeah, we've got some loan products for DSCR. I mean, we recently quoted somebody last week in mid sixes.
Mm.
So, leaning toward the high sixes, so like in 6 sevens in that area. So we're pretty aggressive with it because, again, it's a great product. The people who use it, generally speaking, overall, are serious, people who are borrowing money for a real purpose.
Yeah.
They want to take cash out of their current investment property to buy a new property, and then, or they just want to buy new property so that it increases their wealth, increases their cash flow, set them up for better for retirement, et cetera, whatever goals and aspirations they have. They have a reason. It's just not, I don't have anything to do. I think I'm gonna buy an investment property. It's a reason.
Got,
So
gotcha. And so real quick, you mentioned taking money out of the property. If someone has a property and now with the new product that you mentioned earlier, could they, if they have a property, could they come to you, get money to renovate their property and then refinance into that DSCR, or is that not an option?
they have an investment property.
Yes.
It's,
And it,
does that investment property need to be fixed up?
yes, it needs some work.
They already own it.
Yes.
Yeah, so we could do a cash out refinance on that loan, on
Gotcha.
that house.
Gotcha. So it would just be a cat. So what if does the condition, will the condition matter being that they need to do some updates, etc., or is it
Generally speaking, can it be does it need to be a complete gut rehab? We have to do that on a case by case. I'll take that to the investor. I think, every situation is going to be different. So
gotcha?
it goes back to what I was saying before. And, sometimes I push myself and I say, look, if I'm not asking for an exception, I'm not trying hard enough. You know what I mean? So that's a
Gotcha.
situation where I would walk it into the underwriter, virtually speaking, say, hey, look, here's why I think we should do this loan. It may not fit under normal, guidelines, but generally speaking, yes, they want their properties. Ideally, if the property's already rented out, that's a very, very good thing. Okay, let's start with that. If the property is not rented out, but it's livable, that's also good. If the
Gotcha.
property is not rented out and it's not in good shape, okay, it's about, okay, how bad is it and what needs to be done. Okay.
Gotcha.
So, like I said, now we're coming up because there's a great need for that type of investor. okay, who wants to fix up their property and they still want to use a DSCR loan. That's where, I talked about, hey, we're going to give you the fix up money, get you ready for, how that property is going to be at the end. I.e. today is worth, say, 250. Tomorrow it's going to be worth 350 with, $65,000 worth of work, right? So now, okay, it can be rented out because if it's in bad shape because of the last 10 or whatever, or neglect over years, it can't be rented out. We know
Yeah,
that. We get it.
yeah.
Okay. Now we want to set you up so that you have renovation money and we walk you right into a DSCR loan. So we start with the DSCR loan right from the beginning. Have that in mind.
Gotcha, gotcha, gotcha. Now, what type of properties fit this? Single family, multifamily, uh, short-term rentals? What type of properties fit this type of product?
Yeah, yeah, great question. So, yeah, single family, no question, all the way up to 10 units is where I go. I go all the way up to 10 units. And we do, when you go above 10 units, that's more of even more commercial, I'll call it, because this space is still, to some people, they call it commercial. 1 to 4 units is residential. 5 units to 10 is technically, commercial, depending on who you talk to, but they are residential units that we're looking at. We can do it, yeah, with just about any of those products that fall in that category, unit wise.
Gotcha, gotcha, gotcha. So how does you determine the rental income for the DSCR calculations?
That's a great question. So first, if there's a lease on the property, we look at that lease. And if not, we have an appraisal done on that property. Let's say in this, a person's buying a property, they had intent to rent it out. Okay. There's no tenant there. We'll look at market rents. We'll ask the appraiser to give us market rents for a 3 bedroom, 2 bath in that neighborhood. What are they going for? And then that will be used to qualify the person. And that's
Gotcha.
kind of what was, what you were alluding to in your meeting last week, your video last week, how some people were taking advantage of that situation, and there were no renters, and there was no intentions of really getting anyone in there. I think is what the general line
Yeah,
your video was all about. So yeah,
yeah,
so
because they were just taking and doing the renovation or doing no renovations and taking the money somehow,
right.
and then putting the property back on the market and actually getting folks that are probably like from out of state, out of the country to buy these things sight unseen. And then you get there, there's no renovation or anything happened to the property, which is crazy.
So we will look at current rents or future rents.
Yep,
Answer the question. Yep.
yep, yep. So, what are the comparison for conventional and DSCR interest rate?
It's a great question because actually, in a lot of cases, my DSCR loans are better. The interest rates are better. Fannie Mae, Freddie Mac, if you ask me, in some instances, where the interest rates are going to be higher, people may say, well, why is that? Well, why are the interest rates higher? They haven't told me this, but I can only guess. It has something to do with, they're ultimately wanting to get people, you know, for lack of better, they're sending a message. Maybe they could do without some investment loans. I don't know. But I can just tell you this. Going back to the main thing, I should say, forget Fannie Mae, Freddie Mac, forget that part. The
Hmm.
main thing is the DSCR loan community, those who do those types of loans, they know and understand where rents are in the marketplace. And they know if the interest rate is too high, we can't qualify people for those loans. Okay, it's not attractive, for them to do the loan, okay, or buy the investment property. There's no positive cash flow. Okay, so because I know with some situations with my, like I said, with my full doc type loan scenarios, it's not that attractive. These are the most attractive, even for that reason.
Gotcha, gotcha. And so you mentioned earlier about interest only options. What are the terms? Are they 30-year? Are they ARM terms, like terms? What do the terms kind of look like?
Only part can. Lasts anywhere from, 5, or no more than usually 10 years. As it relates to a fully amortized loan, you're talking 30-year mortgages. And I always encourage all my clients, my investors, you got to take the 30-year loan. Say, well, I want to pay it off in 15, so I want a 15-year loan. The interest rate's lower. It's like, no, it's you can always pay it off faster at any time you want. Now, but and you get a better cash flow, positive cash flow when you're an investor. Okay, so there's no real need to try to pay it off faster. It just doesn't make to me, unless you have a strategic reason for doing that. Okay, I get it. But generally speaking, I try to, have my clients go the other way. Now, you brought up something here too that makes me think about there are prepayment penalties with these. There can be, okay, there can be prepayment penalties, I should say, on these DSCR loans. Remember, the banks and financial institutions are in this business to make money. So if you pay that loan off real fast, boom, there that interest income is gone,
Yeah.
right?
Hmm.
So there is prepayment penalties. Usually you can buy them out, and 3 years, 2 years, or 1 year, and then sometimes you can have zero, prepayment penalty. But you always got to be ready for that as part of the conversation.
Gotcha, gotcha, gotcha. And so the where did I want to go with this? Because I wanted to ask you, I want to make sure I don't ask the same question. Because I think you answered one of the questions, which is pretty much there's no limit to the amount of properties that someone can purchase under DSCR, right?
Sure. And to make sure we're clear on that, you can have some investors, because again, there's more than one lender out here that does this type of loan.
Okay.
Some lenders may say we have no limit, but or we have a limit with us, okay, because they want to minimize their exposure to you. So if you have, Marcellus, you've got 20 properties finance, okay, and all 20 are with investor A. Investor A is like, hey, Marcellus, all due respect, if something ever bad happens to you, we're going to be stuck with these 20 properties. Okay. So maybe they'll say, but they feel much more they feel much more comfortable if you have 10 with them, okay, and then 20 with someone else, or vice versa, 20 with them. You can have 10 with somebody else. Doesn't matter to them. They're just more focused in on, okay, how much exposure they have to you. Because again, it's the business decision, even for them, to say, okay, something bad happens to our client, we're going to be stuck with all these properties. And they don't want that.
Gotcha, gotcha, gotcha. So how different is the loan DSCR loan process to the conventional financing as far as timeline expectation and underwriting differences?
This is a great question because I always like to try to get everyone started as fast as possible, get everything in, get you pre-approved. So when you find the house, boom, we can go to closing, within 30 days. All right. So that's my answer. So always going to be within 30 days unless something weird happens with the appraisal. Because other than that, there's no real, reason to have any, holdups. But things happen with properties and sellers, et cetera. But generally speaking, we can get it done within 30 days.
Gotcha. So are there any mistakes, big mistakes that investors make when applying for DSCR loans as far as you've seen?
No, I think that you got to make the decision up front very quickly. Do you want to put the, property in an LLC? Not only the property or the loan in the LLC, or you under your personal name, and that's really it. Outside of that, it's just about getting your documentation in. Even though it's very little documentation, it's still documentation, still things we have to do. You still got to get your, insurance all squared away. You still got to be clear. Look, this is obviously a business decision. You need to make sure it makes sense for you to be able to do it. We may approve you, but look at your own numbers. Make sure you realize this is real. And that, hey, you may or may not have a prepayment penalty. Put that into your, business plan. All right. Because you may want to exit the property in 2 years, but you still may have a prepayment penalty. Let's talk about that on the front end. Okay. Maybe you ought to buy it out. Maybe the area you're buying in doesn't have a prepayment penalty. So there's an entry strategy and there's an exit strategy. So if I had to say, if anything else, Just remember, there's an entry strategy, exit strategy, and let's talk it through and and get you to the finish line so that there's no surprises. I don't like surprise parties, and no one likes a surprise when it comes to a mortgage going the wrong direction.
And so to give somebody, if they see this video, pro tip of they're thinking about DSCR getting an approval, say to those folks exactly how you want them to come to you right now, and if there's a way they can come to you that will make sure that they can get a pre-approval without any problems.
Just call first. Just give me a call. If you've seen this video and you're at this point, you're a serious person. All right. Just call me. Let's set something up because you can get information. All right. And you can get some education. But motivation, education, without any know-how leads to frustration. So the best thing to do is let's get in here and talk about your strategy. It's like, hey, do I want a tailored suit or do I want just a suit off the rack? I want a tailored suit. So to get a tailored suit or outfit, as a female, listen, let's talk to the tailor. I'm going to be your tailor. I'm going to help tailor this transaction to your scenario, whatever you need, because there's no two situations that are alike. You know, the only thing that we all have in common is we may want to be investors or you're an investor or a landlord. And now it's time to let's talk about your scenario because someone else's scenario is not going to be yours.
Are there any DSCR loan guidelines that have changed recently post 2023 market changes, as far as you know?
I mean, it's just getting better and better because this is a hot, 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 hot product. I mean, Loan Depot, the company I work for, my NMLS number is 658931. We're a national lender, and years ago, you wouldn't think big lenders like this, but Loan Depot's super aggressive. Okay, super aggressive. They want their hands in everything. If they can lend it out and they want to lend it out, no matter what the product is, within reason. So, yeah, there's nothing to change. The guidelines just keep getting better and better and better. The interest rates, get tweaked downward and downward. It's more and more competitive space, but to make sure that we get you all in squared away and point in the right direction, the best thing is let's get a phone call. Let's figure out who you are, what you want to accomplish, and then let me show you the numbers. That's what it's all about. So you can feel comfortable and then, let's get your documents uploaded to a secure spot. So when you're ready, we're on set go.
Does it matter if the investor is looking in a high appreciation market, cash flow market, or a market that has rising rates?
Yeah, man, absolutely. So, like you mentioned in your video last week, and whoever didn't see Marcellus's video from last week, you got to see it. You got to check it out. It's worth your while. Absolutely. So,
Appreciate that.
yeah, absolutely, absolutely. I mean that sincerely. You got to see it. And even if you're an agent, I would show that to your clients. And clients. I'll call Marcellus my common sense agent. He's the one. He's got a lot of wisdom with him. So the main thing I would really focus in on again is let's get your application done and let's get you in the system. Give me a call 202-409-8103, 202-409-8103, or email Brian Washington at loandepot.com, Brian Washington at loandepot.com. So did I answer your question
Yeah,
about okay.
yeah, yeah. And Brian, wealth of knowledge, like always with the loan products and topics, man, and appreciate you taking the time to come on and share the information. Do you have anything else you want to share? And where outside of your phone number, is there anywhere else, the website or anything that they can contact you if they just want to apply for a loan or?
Yeah, loandepot.com, LOAN, depot, DEPOT.com /Brian, BRIAN Washington, /Brian Washington, or text me, give me a call. I'll send you back my calendar. And that way we can, lock in a time that's convenient for you and we don't play phone tag, etc. So however you want to get in touch with me, I'm available and always happy to help and show you the numbers because it's you got to know. I want to be that source to help you understand how this works from beginning to end. So there's again no surprises. No, when it's all said and done, you're a happy client and ready to go to closing, buy property, refinance property, or renovate.
Folks, that's another Hump Day Real Estate with Kendall in the DMV, and we're signing off. Thank you again, Brian.
Thank you, sir.